Good morning. Good morning, everybody. Good morning, Chris, Greasy, Rich, Sharif, Abel. Good morning, Julian, Tyler. How are y'all doing today? Good morning. Good morning. I had a busy morning actually already. All right. So before we get into anything, we have 10 a.m. news. Let's go 28 on this. Jolts. So at the moment, I'm kind of not really looking for anything until after 10 a.m. Good morning. Good morning. Hey, Shadow, Jeremy, Noel. So let's go to the daily. The daily is, man, it's actually I could probably get rid of some of these new day opening gaps. Let's see, what's today? The 4th. So we have anything before the 27th. I'm going to get rid of if I have anything. So we have the 23rd. Let me get rid of that. Kind of clean it up a little bit. 22nd. Let's get rid of that. Because I have these on my other chart. So I can refer to them still. But I don't need them more than 5 days old on the new day opening gaps. The new week opening gaps, I don't think I have any old ones on here. More than 5 weeks old. Nope. All right, cool. So let's check out the daily chart. The daily chart is, man, this is some kind of weird times. Trump volatility is real. I mean, he'll tweet about a tariff, and man, it's something for sure. And the whole thing with tariffs going on right now. So as you can see, like this week, here, let me go to the weekly. Look at this weekly. Like we're in this weekly range, right? So I mean, it can literally go long or short. Like it can literally go long or short. So I still have to be neutral in my overall bias. And look how we're gap down. You know, we have this gap. Like we're just like in this area, and we really need it. So I'm looking for a run either below last week's low or above last week's high. Like to before I can really have a true bias. So this gap already here, as you can see, we closed up here yesterday at 408, right? And then we opened up here at 596. So we had a big gap open. Gap down, gap up. So we'll see. At the moment, I don't really have a true bias for, an overall bias. I have my levels marked out here. I don't, like yesterday, it was very clear to me what I was looking for. Manipulation high, take a short, basically. Today, it's not extremely clear, so I'm going to have to wait for that JOLTS report more than likely. We do have a minor buy-side liquidity right here. Let me mark this high. This is going to be a minor buy-side liquidity. Because we do have, these relatively equal highs here and here. I could see it running all the way up here in the upper 500s. I could also see it taking this sell-side liquidity down here. It's the 15-minute chart. So we have this huge fair value gap right here. Let me mark it just to show. So we could, we still haven't completely filled that opening range gap yesterday. We got to the midpoint. Well, actually, we did fill it today. But before this, we hadn't filled it. Anyway, that's the middle. Oh, no, that's London high I was looking at. No, we haven't filled it. The high is all the way up here. So I could see it. I can see it trading up, taking this buy side liquidity, running into these inefficiencies here. I could also see it going down, taking the sell side, trading into this big inefficiency. So we'll see. Just gotta kind of be patient today. That news, and really watch price and see how it wants to react with all the PD arrays, basically. We actually don't have an opening range gap today. Still analyzing a little bit here. Go back to my electronic trading hours. No, we did fill the gap. I'm sorry. I was in the electronic trading hours still. Yeah, because here's the low, midpoint, and here's the high. So we did fill it yesterday, right after the close, and then came down. So I'm gonna get rid of that. Clean up my chart a little bit. So we'll see. And basically what I'm gonna wait for too is see if we engineer any more liquidity areas before the news. Because that could happen as well. Where it engineers some liquidity and then manipulates the opposite way around the news. And so we'll see. We shall see. Good morning, Steve. No, you're not missing anything yet today. Still just have to wait for the underlying narrative to show its hand. All right, so yeah, no, I today, this morning, and who knows, I might not even get anything this morning, to be honest. Depending on that news, and what the market does. If it's just going to be a running type of day, then I might not get anything. So we're taking those liquidities, the buy side liquidity pools that I have here. So we'll see if it's going to be a sweep. Or if it's just going to keep running long. And it very well could play inside this area for a while, as we're seeing that it's doing right now. where the new week opening gap is here. So hit this 15-minute fair value gap. We'll see if it makes its way down to sell side or not. I don't know. So as you know, my trade entry is if we're going to open and we're going to go up, I'm basically looking for a reversal the other way. If the framework aligns. Let me look at the 1 hour, kind of see what that's looking like. This little gap here, inverted. Yeah, it's going to be interesting. All right. No real bias yet. Just wait. Yeah, that 10 a.m. Jolts news is going to be big. That one should move the market like pretty big. That'd be my guess anyways. We'll see. We shall see. We do have a lot of very old new week opening gaps all up in this area in the upper 500s to 600. And this is where I want to watch, PD arrays. Like here, I want to see if they get respected and I want to see how well they stay respected or not. 932 looks like this is our first presented fair value gap right here. ES SMT. Maybe. I'd be interested. So we have these equal highs right here on ES. I'm sure we'll go take those. And that'd probably leave a fair value gap right here. So I'd expect price to close up above. YM, of course. Looking ugly. Yeah, don't forget Apex sell ends tomorrow. So if you're looking to get more accounts, make sure you grab them. If you need more, as I always recommend though, use payout, take it slow, get your payout, buy more accounts, stack. I didn't just buy 20 accounts right away myself. We'll see. It's struggling to get up above this buy side liquidity, but we'll see what happens. We'll see. How to set up TradingView? Um, like how to copy and all that, or just set up in general. I don't know if you saw the video that I have about TradingView and copying. Oh yeah. Yeah, you'll just need to get. So I actually hated TradingView at first because I was so used to NinjaTrader for years. And then I got on to TradingView and I started messing with it. I was like, I hate this. I hate this. I'll never use it. And I even tried it a second time. And you can ask Chris will vouch for that. I was like, man, I hate TradingView. I'm never using it. And then finally the third time, I was like, you know what, let me try it again. And now I'll never go back to anything else. Yeah, here I'll share the link to that video I was talking about. Seems like it's a pretty popular video. It's my like best performing video. Yeah, and I definitely like yesterday I held through the news. I really don't want to do that today with jolts. So, really hoping I don't see like my really good setup. Like, I don't know what I'll do, to be honest, y'all. If I get like a beautiful looking setup, like an A+ setup, and it's like a couple minutes before jolts, I have no idea what I'll do. I really don't know. Because I do not want to hold through jolts. Yeah, no problem, Jeremy. That's just the easiest route. That's also, I mean, that's why I even made videos a long time ago in the first place. I'd have somebody ask me a question. I'm like, well, it's hard to explain. It'd be better if I make a video. And then a week later, somebody would ask me the same question, and I'd say, yeah, I made a video, but I made it for one person. And then I was like, you know what? It'd be so much easier if I just have a link. I could just put links out. Hey, John. Good to see you. Good morning. See how we're building up this support here? This will be a. What is this? It's kind of cool that you get these little pop-ups for some kind of news on TradingView. Like this one's irrelevant, but sometimes it is relevant. But anyways, I was gonna say this would be a fair value gap here that I would like to see. Like if I did get a short or something, I would like to see it get inverted. How much support? Look where all the bodies are closing, right? And then if it did so happen to invert this, it should work as a strong inversion because of how well it's creating this support here. Oh, yeah, that would be a good signal. And look here. So I'm going to watch this bar that we're on right now. Because you see how it reached up for that buy side liquidity again one more time? Right there. And it closed down. Now, obviously, price is going up. But had this next bar that we're on now struggled to make it above the halfway point of this wick, that would be a really good indication that we may head down. But obviously, it's not struggling at all. So, but that's kind of what I look for in the wicks. When you have these wicks reaching like this, then I'll basically measure out the midpoint of it, just like that, and I'll see the next bar. If it struggles to get past the midpoint and then it closes down or closes lower, then that's a little indicator that hey, we might be going down. For the moment, anyways, you still have to have the underlying narrative with your framework. If it's not, because there's times where it'll look like it'll go down or whatever, but I'm like, no, the market's going up to this level or whatever. So I'll ignore that kind of stuff and just wait, and it'll just keep running. Jeremy. All right, up into this imbalance. Let's see if we rebalance it completely. So yesterday's high would be a nice area to sweep. Here, let me go to the 15-minute chart to show why. So here's the 15-minute chart. Look at this is yesterday's high. Look at this smoothness up here. That means there's going to be a lot of buy side liquidity sitting up there. I didn't mark it because it's if I have an overlapping level, like if yesterday's high is buy side liquidity, I don't mark it buy side liquidity because I know yesterday's high will have it's a key level. So, and right here, a little bit lower, this high of about 565, there may be some liquidity resting above that. But if price makes it up this high, it's just going to take and most likely sweep yesterday's high. So if it does keep going up here, I'd be looking to see if we sweep the high and come back down. Or if it's not going to sweep and keeps running, then that's when I'm not going to take a trade. So again, I'm just looking for a draw on liquidity, a sweep, and then a sell model to go the opposite way in this scenario. Doesn't always happen, but and it doesn't mean I need it to go all the way down the opposite sell side liquidity because it might not. Look, for example, let's just pretend this 15-minute chart gets a fair value gap right here. So if we run up and sweep this up here, I'd be looking to short the pullback back to this 15-minute fair value gap. That's where I'd be looking, sweeping a nice level, pull back either to here or to equilibrium of that run, which if you don't know, equilibrium is just the 50% point, the halfway mark between a low and a high. So this 50% would be the middle. All right, so I would always just look for the sweep, target the middle or the obvious PD array, which would in that case be a discount array, and that'd be my target. And then that way price could do its pullback and make money on the pullback and then get out, and then the market's free to keep going if it wants. I don't need it to completely reverse the market and look for the top and then take it all the way down. Like, I don't need all that. Obviously, we don't have that fair value gap there, so I'm not going to leave it. That was just an example. So at this point, I just let it run. Let it run and just look for areas of a potential draw. And once it gets there, does it sweep it or does it not? That's a yes or no question. If yes, okay, I might look to take a trade. If no, there's no trade for me. Plain and simple. And that's why I like to keep it extremely simple rules. And that way you can be a little more robotic with your trading. It's impossible to be 100%, but you can be a little bit more. Take a little less thinking out of it. Julian, how many contracts do I normally trade on MNQ? That depends on my account size. I'll trade anywhere from if I'm starting a brand new account, if it's a 50K account, I'll start with 3 micros. If it's a 150K, which I don't do 50K accounts, by the way. My favorite's a 150K. But it really doesn't matter the account size to start for me because the ratios of my accounts, it's all the same. It's all gonna be the same. It'll take me the same amount of time to make the profit in a 300K as I would in a 25K because I adjust the contract sizing, right? The only difference that it makes, because every PA account is a 1-to-1 ratio, right? So that's the way it is. It's a 1-to-1 ratio on PA. The only difference that it makes is the evals, of course. So, of course, a 300K eval is going to be a lot harder to pass. But the 150Ks I found, they're still fairly not bad. And I like the extra drawdown. So anyways, the 50Ks, I would start with 3 micros. The 150Ks, I like to start with 6 micros. The 250Ks, I like to start with 8 micros. And a 300K, I start with 1 mini. That's what I do. Now, If I start that account and let's say I have a losing streak and I'm like in the drawdown, then I'll reduce my contract sizing to maintain. But if I'm doing good, I just keep it there and I don't add. I've never added. So even when my accounts were 10 grand above drawdown, I was still, those were my 250K accounts. So I was still doing 8 micros. I never added. So the why the 150 versus 50 is I like the extra buffer, the 5K buffer versus 2500. Even though I trade smaller, I still like that added buffer. It's just, and a lot of it's psychological for me. Because if I go on a losing streak, and even if let's say my risk is $250 per day, right? Actually, let's see. What is my risk? Yeah, because 6 micros is $3, and I roughly want to be around 120 ish ticks as my risk. So it's roughly $360. All right, so if I have a $5,000 drawdown or trailing threshold, that's almost 14 days in a row I'd have to lose before I blow that account. But let's say I go on a little losing streak, right, and lose 2 or 3 days in a row, the dollar amount that I still have available, it helps me psychologically. Like, oh, I still got 3 grand of drawdown available. There's no problem. I'm good. Just when I get back on my little winning streak, then no problem. A lot of it's psychological for me. Even though, like I said, on a 50K, I do trade smaller, but I just like seeing the number. Yeah, see, we're making our way all the way up here. I'm looking for a sweep of this area and then jolts to run us back down. However, jolts could shoot us to the moon. And in that case, I won't be taking a trade. Because after this area, yesterday's high, I don't necessarily have a target I'm comfortable enough with. Like this high right here. And then at that point, I mean, it could just keep running up into this inefficiency, up into this buy side, last week's high. I'll just wait. I'll just sit out. I'll just wait. I'll wait till tomorrow, or again, I'm not trading Thursday, so I'll wait till tomorrow or Friday. And we have NFP Friday, so understanding you don't have to trade every single day is a huge thing too, by the way. That's hard, especially when you're trading prop firms, extremely hard, but you got to do it. But that's why I loved when Apex went to no payout windows anymore, where you don't have to wait for a certain payout window to open up to request, because that removed a lot of urgency for me. So, because I don't have to worry about, oh man, if I don't have my days or my profit by the 5th, I got to wait 2 more weeks. No, because I know I can request any day now. So that helped me a lot. ES is lagging. Let's see. Let's look at ES. I hardly ever look at ES to trade NQ, but that big volume imbalance right there. But yeah, it took those highs for sure. All right, I want to see. Look how close it got to yesterday's high. I would not look to short until it sweeps yesterday's high. It's way too close. We are getting that 15-minute fair value gap, so I'm going to mark it. I hate that. There's our jolts. Joltsy jolts. Let's go, jolts. Sweeping that high. Maybe. Hopefully. And this potentially could be a big old order block, a bearish order block if we come back down. So let's see. Yeah, I love not having the payout windows. Those put so much pressure on me. Like, and then you start counting the days ahead, you know? It's like, all right, I gotta make this amount, this amount, this amount. How many trading days do I have to you start doing all that? And you're like, and then as it gets closer, like that's extra. That is extra uh, you know, stuff being put in your head that's not good for sure. All right, so this would be a bearish order block for sure if we close below it. Actually, price hasn't really expanded that much. You know, it's only, I mean, I guess it's about 100 points up. But so what I would look at if we close below this low, I'd be looking to see if price builds up resistance at the open of this candle. And at worst case, the middle of it. But like I said, price has to close below it first. If it doesn't close below it, then it's irrelevant. All right, get rid of that. Come on, pop up. My antivirus thing keeps trying to tell me to update. I know I need to, but it keeps popping up on me. Yeah, see, if we don't sweep this area, then I'm not taking a trade. I'm really looking for a sweep here because now we took this high as well. And I'm not convinced we're going to sweep. That's just what I'm looking for. So also what I want to see, you see how price came right back into the wick of this down close candle and came up and closed up here? That's a good sign for the moment that its price is going to keep going up. So definitely need price to close below this opening of this big long candle there to have any expectation of a reversal. Yeah. Will. Yeah, when X, referring to old Twitter, when that moves the market more than financial news, yeah, you know we're in some times. Like you got to pull up X to watch the news now to trade. No more financial juice. Make sure you're following the right people. Man. So this type of price action right here, right now, is price action that I am typically not a fan of, because this is where you'll get your small movements, some little accumulation zones, and then bursts. And if you're on the wrong side of that, you'll get ripped up. And if it stays like this for the next 20 minutes, There's zero way I'm trading. And look, here's the thing too. I'm a here's the thing guy. Today is what? Tuesday? We had a really good day yesterday. It's NFP week. There's a lot of news. There's a lot going on. Like, know when to hold your wins and like value those good trades, and know when it's just not the time to trade. Like that's a big thing. Because even let's say I think it was last week, I only got 2 wins. I only traded 2 days. Was it 2 or 3? And it's like, that's a win. That's a good week. If this week I get 1 or 2 wins and that's all I get, that's a good week. Because y'all see, when you leverage 20 accounts and you're getting $200, $300, $400, $500 per account on one good day, I mean, just if you have the patience, that goes a long way. A long way. It's so easy, especially right now, if you hop on Twitter or YouTube and seeing some of the people trading and all the noise, it's so easy to get caught up in that. And I used to be, oh, I want to do this, I want to do this. Oh, this guy made $100,000 this month. I want to do that too. I can't wait. Like, it's almost like and actually for me, the best thing is cutting that noise. When I started cutting out that noise, say, you know what, I don't care what anybody else does, that's when it really started helping me a lot. Like, you just got to cut the noise sometimes because it is noisy and dramatic. Holy man. Not for me. Not for me. I'm just waiting for somebody to say something though, like come out and go for me. Because I see it on Twitter and YouTube all the time, these guys going after each other. Especially ICT traders. You know, ICT traders get a lot of heat these days. Hey, I used to talk trash for a living playing basketball. I'm an ultimate trash talker. I just don't do it here. But, you know, I don't start nothing, but I finish them. I'm kidding. Kind of, not really. Yeah, look at this. And these days that we just do this slow creep like this, where we're just slowly creeping up. Yeah. I'm telling y'all right now, I'm probably, look, I'm sitting like this whole time. Arms crossed. Like I'm not trying to touch nothing. There's nothing right now for me that I'm even interested in. So but you can see here. All right, I'm touching my mouse now. You can see here how we built this support right in this fair value gap. And when you have a buy side liquidity, so a key thing to look at when you're looking for sweeps is you want to see price not spend very much time on the opposite side of that. So for example, this minor buy side and this buy side. Like if we were going to sweep this is what you're really looking for. Like how we have this buy side here in this fair value 15-minute fair value gap, how it wicked, touched it, and like just immediately came back down. You really prefer, and it could close up, but you want to see it not spend a lot of time there, very little time, and then just come right back down into the area. And that'll kind of give you more clues of, hey, this may actually be a sweep. But whenever you have something like this, where it comes up and it starts building, bodies closing above that minor buy side liquidity, and there's a fair value gap right there. It's not invert. That's why I said this one right here would be one I'd be looking for it to invert, but it used it and built support on it. So that's a good indication it's going to keep going. Like it's not going to It's not going to run up a little higher and then just drop. Like it could, but it's not likely. So, and then here, this yesterday's high where I said I would like to see a sweep of that. So this was good. This bar right here, this would have been really nice actually if we popped up, spent little time, and instead of doing this little accumulation, where again built up support above yesterday's high, body's closing there. So right there is a little indicator. It's not what I want to do. Right there's a little indication that, hey, we are probably going to keep going up because we built this little support. Oh my gosh. This little support right in here. All right. Body's closing there. Wicks closing here, all right above the yesterday's high. We never came. That's why I was mentioning. I want to see it price come back and close below this opening. Then this would have been an order block. Then this would have been a sweep, and we would have been looking good to head down to this low, or at least into this 15-minute fair value gap, or at least first presented fair value gap, or London high. See, there's a lot of targets. So because that didn't happen and we built this support right here, I don't think we're coming down. Like we may just keep going up and just kind of slowly, steady going up, and we may see something, a change in the state of delivery this afternoon. And in those cases, save your capital, save your mental capital, don't trade. However, that's me. That's my analysis for the morning. However, if you're trading and you see something you really like up here, you're like, man, I know for sure we're going to last week's high. I know for sure we're going up here. I have all these reasons. Then, yeah, of course, you can hop in, use any of these PD arrays, and take it up there. That's just not my model, what I do. Gotta look for something to talk about if I'm not going to trade. So, yeah, let's go to the 1 hour again. We're hitting this 1 hour fair value gap. I honestly don't believe we stop right here, though. So you can mark it out. Oh, we haven't even hit it yet. But I don't think we just stop right there. Because if you look here, what do we have? Right here, we have this inversion on this 1 hour. 1 hour inversion. Let me change the color. And then overlapping it, you have this 1 hour fair value gap. We got high, low, higher, high, lower, low. So this high, low. Yeah, so this could actually be a little breaker right here, this bar. And then this will be an order block right there. So if I was to guess, and it may not be today, but price may trade. I don't think it would just stop in this fair value gap right here in the 600s. I mean, it's still quite a bit ways away. It could, but I think I would be more inclined to believe it'd come right up into close to 800 actually. If price just kept going. Like I don't see it stopping just right there. That's based on the 1 hour. So it could be like late this afternoon. Who knows? That's just if price decides to keep going. So because of these other reasons that I mentioned over here, I would be very hesitant to go short and be expecting some potential fake outs. Yeah, well, hey, that's the key, you know? You formulate a game plan, a framework for what you're looking for. And that's why I really like this too, the way I trade, is because I can formulate a framework and a game plan. And all I'm looking to do is execute that. If it happens and I execute it, great. Right or wrong, that's it. If I'm wrong, then I just go and analyze. Did I have the framework right? Did I analyze it right? Or is the market just crap? Or is it both? And that's it. That's just that simple. And if the framework and everything I build, it doesn't happen, then I don't execute. Like, should be that simple. For me, I mean, that's why I like it. There's, there's so many trading strategies, but that's why I like it, because I'm kind of a structured person as it is. I like structure. I like plans. I don't like just like winging things. So, if I don't have a plan when I'm trading, and I'm just looking for like little bitty specific things or scalps, then I just feel like I'm too zoomed in to actually, as to what's actually going on. Yeah. And that's the thing, like exactly what you said. Will said he noticed a huge difference in his trading when he started setting up a plan in the morning. I agree. That's because, and you got to have a plan, especially if you're trading ICT. You can't just open up charts and say, let me look real quick and start trading. No, you actually have to open up charts and analyze it a good little bit before you get going. That's why typically when I start my stream, like I've already had everything analyzed. And that's why I like to do that before, because if I do my analyzing while I'm streaming, I don't want it to be messy. And sometimes, while I'm analyzing the market, I'm looking back and forth. Like I'm actually taking my time and trying to really figure it out. And then that way, whenever I start my stream, it's pretty seamless. I can say, hey, this is what I'm looking at. This is what I'm looking for. This is why, and have it, laid out versus the whole thinking process. And I feel like that would help, viewers a lot more, in my opinion, as to what my thinking was. And just like this morning, I had my framework, or actually my levels and everything marked out, but I didn't really, it was up in the air. I wasn't very confident either way. So, and you can see this is a prime example. Look, okay, take yesterday's stream and today's stream. Yesterday's stream, what happened? I opened up, popped in right at 9:30 when the stream started and said, hey, this is exactly what I'm looking for. I'm looking for manipulation long, take down here, da 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 da. And guess what happened? It happened, executed, boom, beautiful day. This morning, opened up, looked, I'm like, it looks, I don't know. We have this. I'm not too confident, but let's see what happens. And as we're sitting here, hasn't been anything. So it's correlated, right? So it's correlated. And as long as we keep that in mind when we're trading, you should be able to have that confidence every day. Eventually, I know a lot of people are still learning how to trade, but when you get to that point, it should be that simple. You should know by the time you're done doing your framework and analysis, you should know, hey, this is exactly what I'm looking for. And if you don't, and then that's okay, because it can frame itself out while you're trading. But at that point, you have to remember, okay, I'm only going to take a trade if it really frames itself out and shows its hand. If not, then I can't. Why would I take a trade when I'm not very certain? And that helps with the discipline part, like big time. Well, I wasn't really short biased today. I was pretty neutral overall. And basically what I had was, so John asked if I mind going over why I was short biased, or yeah, why my bias was short. So I guess let me put it this way. I'll have a overall narrative of what I think the market is looking like. And then I'll have what I'm looking for in a trade. And sometimes I can be like, my narrative for the market could be long, but I may be looking for a short. So, and I'll explain that. Um, so like today, I always start with a daily chart. That's going to give me my overall bias. But my daily chart, I mean, we're in this, look at these days here. Like this zone right here. Like this is just ugly. Like it can go up or down. We have lots of buy side liquidity up here, lots of sell side liquidity down here. So overall, I have to remain neutral. Like I'm not very convinced it's going one way or the other on the overall, on the long term, on the daily. But intraday or within my trading session, that's whenever I jump down to the 15-minute. And that's where I really get my bias for my trade. So I guess if it makes sense, I can look for a bias, a long-term bias on the daily, like overall, and then I look for my trade bias for my session. Because if I know for the day that, hey, this day should, within today or tomorrow, we're probably going to reach this level up long, right? Then I can know, because I know how the market works, how it moves, right? It doesn't just go straight up. It'll manipulate down and then it'll go up. And then the next day, if it hasn't reached that target because the buy side or the long side is extremely obvious, then the next day, what am I looking for again? A manipulation down and then a long. So like that's kind of how I put two and two together. If I had no reason for price to really continue up and go long, and I'm really looking for it to be short overall from the daily chart, then that's whenever I'm looking at each day until it reaches that narrative of the sell side or the short side. That's where I'm looking at each day for a manipulation up and then a rundown. Manipulation up and a rundown. And then for my trade, I can take a trade long in that manipulation up, or I could take a trade down in that distribution down, if that makes sense. So whenever I jump into my framework for my trade, that'll be the 15-minute chart. And that'll tell me, am I going to take a trade in that manipulation? Because that's okay. That's fine. Or am I going to take a trade in that distribution side? So that's where I start framing out my buy side liquidity, my sell side liquidity. And then I wait. So for example, like today, we had sell side down here, these fair value gaps down here. Like I had reasons price could come down here. This was relatively equal lows. We're inside this big imbalance like down here. So there's some sell side built up. And then up here, I had this minor buy side because that was where we reached up at 730 and kind of created from here to here these fairly relatively equal highs. And then just above it, we had this 15-minute fair value gap. Let me get rid of this one because that was nothing. This 15-minute fair value gap. And then just above here, we have this area of smoothness, which is more buy side liquidity. So I know since we have two sides here, this side down here, and then this buy side and this buy side up here from yesterday's high, it could go either way. When you have two clean sides, buy side and sell side, you wait for it to take one and then it should head to the other side. So because we opened and we just ran up and started taking the buy side, my trade entry is let it run buy side or let it draw to something and then look for it to take the trade on the pullback. So that's why I was short, because we opened and just went straight up. So at that point, I already know, okay, let's wait for a sweep, a draw on one of these liquidity areas, wait for a sweep, and then take a short, because I look for reversals. So had we opened and ran down first and swept here, then I would have been looking for a long reversal back up to an area. And because I take low-hanging fruit, I only take it back up a little ways. Like I don't expect, for example, let's say price does this afternoon or wherever decide to start pulling back after it sweeps this area. I wouldn't be just expecting it to run all the way down through sell side, because I'm neutral overall on the daily chart. I don't know if we're going to go long all the way into the 800s. I don't know if we're going to run short yet. because I'm neutral. So I can't expect price just to run and distribute all the way through sell side. So what I do is I just look for it to pull back to a higher time frame imbalance. That's it. Um, Now, if I had a overall bias from the daily chart that we're going down, that's when I'd expect a sweep way up here, and then yes, run all the way through sell side. If all that makes sense. I know I'm like kind of spewing information, but I hope that makes sense. And I just really want to kind of clarify the two bias. I have two bias every day, and sometimes they align and sometimes they don't. I have my overall bias for the market, and then I have my trading bias for my trade. Sometimes they align and sometimes they don't. Awesome. I'm glad it makes sense, because I know sometimes when I'm just talking and not like, yeah, I'm showing you here on the chart some, but because it's not actually playing out, most people are visual learners. So if I'm just talking it, then sometimes it's hard to envision, versus if it's playing out. But I mean, yeah, it's pretty I mean, it's pretty easy visually, even though it's not complete. But whenever I see this here, like these days, all inside like this area, that's why I'm really neutral overall. And when I'm neutral overall, that's when I'm really relying on that 15-minute time frame. And I'm not looking for huge runs. I'm just looking for a sweep and take it right back down to either equilibrium of that range or the first higher time frame inversion. I mean, PD array, and that allows me to be able to get a good win, a good trade, and not have to be 100% right on the market. So, because there's been many times where I'm like, it might run low, but I get a trade on a pullback, get out, hits that higher time frame fair value gap or PD array. As soon as it hits it, I get out, and then boom, it just continues going the opposite way. I'm like, well, I was wrong on the day, but I was right on my trade. And you see, like here, it's just doing this, doing this. I would not be looking for a short. I would not be looking for a short right now. I would be looking at this accumulation and then get a second stage distribution where we just continue up. And we may even have a point. You may even have a point like, look, here's another little. This is okay. So this is fake outs, and this is why you have to have a underlying narrative, because you'll see here, look at these relatively equal lows right here, this low and this low. So I would not be surprised if we see a little what looks like displacement underneath these lows, just to take this small engineered liquidity right here, because it's accumulating. I would not be surprised to see a little wick down, maybe even a little fake out like we're just displacing underneath these lows, and then continue up. I would not be surprised to see that. Does the level 22,000 interest me as a potential buy side liquidity? Let's see. So I used to also look at the round, like 3-digit triple zeros, all that as huge levels, psychological levels. And it can still be psychological levels, but I found there's psychological levels for retail traders. Because there's been many times where I used to trade before ICT, like, oh, there's 22,000. That's going to be resistance when it gets up there. But it gets there, and maybe it kind of like you'll see some accumulation right at it, right below it, and then wham, it blows through. Because it's telling you, it's creating the image of resistance there. Resistance. So people are shorting. Stops are going to be right above it. And then wham, it'll do a nice buy stop run, and it'll wipe everybody out. But 22,000, let's see what we have around there. I don't have I have last week's high. So yes, that is where I was saying I would look right above last week's high as a liquidity pool. Let's zoom out a little bit more. I wouldn't necessarily have 22,000 itself, but between 077 and 110 is where I think we would go to. If we get to 22,000, that area, I believe we would displace up through that to 077 to around that 110 area. That'd be my guess. Based on what I'm looking at here. And that's if you go to the 4 hour, look at all these relatively equal highs here. You have this pullback up here. You still have this huge fair value gap. But then you have this pullback here, right? And then this pullback right here. Let's see, what's the high of this? 094. The high of this is 094. You can see it up here, kind of. 094. And that's last month's high as well. So yeah, there's going to be a huge liquidity pool right up here at about 094. And then here you have another pullback. Anytime you have pullbacks and it's just below that last high, that's going to be a lot of liquidity resting there. Like this one is not very close, right? You have this high and then this high. Like, yeah, this can be a pool of liquidity there, but not an extreme amount. Because when this close to each other, there's going to be a lot of liquidity there. And then you have this one, this close to this one. So yeah, right in this area. That's why I have these levels marked. This high is 111. This high is 078. So I think between 078 and 111, that's going to be our largest buy side pool right now. Then after that, it's all-time highs. So, but that's like, much further out. Yeah, something on my mic. High time frames were really neutral. So, yep, that's it for me, y'all. It's 10:30. There's zero way I'm taking a trade. And honestly, if I were again, see how I marked this? These equal lows. Look right here, another equal low. So it's engineering quite a bit of minor sell side liquidity right there. If we go to the 5-minute, look at that. So if we get this close here, I could see us doing a little sweep underneath. Look, and we have a 5-minute fair value gap right there as well. So I could see us doing a little sweep underneath here and then a continuation up. But anyways, yeah, so if you're going to be trading, I honestly would wait for 1:30, at least 1:30 this afternoon to look for a setup. Because once we get to 11, then you got the lunch hour. I'd probably honestly wait till about 1:30 or later. And I don't trade afternoons because I never do that. So that's going to be a wrap for me, y'all. We have tomorrow. Tomorrow's Wednesday. I'll be on. And then again, no Thursday for me because that's the day before NFP that I don't do. And if you are going to be trading, watch this area right underneath here. What's this low? This low is 620. So watch a sweep under 620. All right, watch a sweep under 620, and that may distribute a continuation up. Yeah, and we'll see. And this is a good day where just watching the market, just watching and seeing. Don't take a trade today if you're still learning this stuff. Just watch and see how it acts. See how it reacts. Watch this. Don't click a button. Watch this. See if price sweeps here. See if it actually displaces down and goes down. See what it does. Then you start picking up on all this. So, all right. Do you need anyone to help edit your YouTube videos? No, I typically edit them myself. Well, actually, my YouTube videos, I don't really do much editing at all on them, honestly. I really don't. They're pretty straightforward. And then for like the little clips that I do, of my videos, like the small clips, I use this AI tool and it's been pretty good. So maybe one day. I'm not there yet. But hey, thanks for joining me, everybody. If you don't mind hitting that like button. Again, if y'all are gonna trade, be very careful. Take your time. I always say trade well, but hey, maybe just watch the markets. This is a good watching day. So, but anyways, thanks for joining me. Glad to be here. Hope y'all have a great rest of your day, and I'll see y'all tomorrow. Trade well, everybody.